So in this video, I want to talk about a stock that I've spent $30,000 on, which is quite a lot, but I do think it is the best opportunity currently in the market. The stock that I'm talking about is Evolution AP, which I've been buying since the fall of 2023. And like I said, I've spent $30,000 and it's currently worth 25,000, which is not too bad. And if you can't take that kind of volatility, you really shouldn't be in the stock market. But my average price is 95, with the current price being 79. So I'm about 16% down, which is not too bad. So if we take a look at the look-through earnings, which Buffett calls them, which is just taking a look at the company and not thinking about the price it's selling in the market. It's like if you would own the company, if it were a private company, you would own 100%. You wouldn't be thinking about the sell price. You would just be focusing on the performance. And that's exactly what I do with my look-through earnings. So if we take a look at the one-year free cash flow growth for Evolution, it's 14% and 36% CAGR for the 3 years and 51% CAGR for the 5 years. So definitely a slowdown in free cash flow growth, but that is to be expected. And I don't think it's something that we have to worry about. And we can see here that the most recent financial update was actually in January. So these are very recent numbers. And the company is trading for a ridiculous price, EV to free cash flow of 11 and price to free cash flow of 12, which is, in my opinion, way too low. But I've taken advantage of the opportunity and bought more stock. This is reminding me of Meta back in the fall of 2022 when they were trading at, I think, around the lows. It was about 9 EV to free cash flow. So definitely a good opportunity in my opinion, although I'm of course not recommending to buy the company for anybody. You gotta do your own research because it's like they say, you can't really borrow conviction. And when everything turns south, like it has been in 2024 for Evolution, it's really hard to stay invested if you didn't do your own research, if you're just following some random guy on YouTube or Twitter. If we take a look at some more fundamentals, return on invested capital and return on capital employed, which are some of the key ratios that I always look at when I'm picking out companies. You want to have these numbers high and you want to have them steady. So no volatility in these numbers with Evolution. You can see it's 31% for 2024, which is higher than the median or the median at 25. Return on capital employed 30% versus the median of 25%. And we can see also that return on equity is 32% versus the median of 26. Now, looking at the margins, for some reason, Guru Focus doesn't post margins with foreign companies, or at least the foreign companies that I've been buying. So we'll jump straight into the operating margin, which is very impressive, 61%, and has been growing and yeah, well, pretty steady over the 5 years. So it's staying at 61%. And the free cash flow margin is 56%, which is incredible. And it's actually increasing slightly versus the 5 year median of 53. Now, the company doesn't really have any kind of meaningful debt, which I always like. And they have a lot of cash. You can see the cash to debt is 8. And if we look at the 5 year share buyback ratio, there's a small dilution in shares, but the 3 year share buyback ratio is looking good. And there are fewer shares outstanding than there were 3 years ago. And then we have the revenue growth, which is very strong. So 21% for the last year, and the 3 year CAGR is 31%, and the 5 year CAGR is 41%. So you couldn't really tell from the numbers that the company was having troubles. And if you take a look at the 10-year median for price to free cash flow, we can see that it's actually 46% versus the 12 that it is now. So let's take a look at some valuation math. It's always fun to do, especially when you think your company is undervalued. The free cash flow per share for Evolution is $5.98. And if you look out for the next 5 years, which I do think is maximum time for any kind of valuation calculation, I do think that 10 years is too long and too hard to try to predict anything. So we'll put in 5 years to grow at an interest rate of 10%, and that will give us $9.63 for the free cash flow per share in 5 years. So we put in 9.63 into the calculator, and if the company has been growing at 10% on average for 5 years, I think it's fair to assume that they'd be trading at around 20 times EV to free cash. They're trading at 12 now, and we saw that the average was 46, so that's nothing crazy. So let's put it in here, and that will give us a stock price of 192 in 5 years. So stock is currently trading at $79, and if our calculations are correct, it will be trading at around 192 in 5 years. That would give us 19.4% CAGR on average for the next 5 years, which is pretty good. And I would say that a 10% growth in free cash flow for a company like Evolution is nothing crazy. I would think it's just base case. And if we do some reverse DCF, which is something that I like to do to see what the market is projecting, we can see that if we put in a 10% discount rate, the market is actually predicting a 6% growth in free cash for the next 10 years for Evolution, which I do think is too low. I remember running these calculations and doing the reverse DCF back in the fall of 2022 for Meta, and I think the market was predicting around 4% compared to the stock price of 88 for Meta at the time. So it was just a ridiculous price. So I bought pretty heavily into Meta, which is what I'm doing with Evolution, and only time will tell if I'll be right or not. But if you take a look at some of my past videos, you can see that I have also been very wrong. I did buy heavily into Alibaba, for example. That was not a good decision. And in hindsight, I should have seen the red flags with Alibaba, although they're coming back pretty strong. I do think I bought a very mediocre company. But fortunately, you don't have to be right all the time. You just have to have a good batting average. And a batting average of around 60% is pretty good. So if you have 10 companies in the portfolio and 6 of them do good, you're going to do pretty good over the long run. Now, this is something that I wanted to show you, which is my Evolution deep dive. For those of you who've been watching the channel for some time, you might remember my checklist that I had, which currently has about 130 items or so. What I did is I trained Grok to do these deep dives on businesses. I just separate them into a couple of parts and train them to get the data from Guru Focus and QuickFS, and then to pull data from the annual reports and from Value Investors Club and from different Substacks and join Yellowbrick and all of these sources that I use normally. And I compiled a report of how many pages is this? This is 42 pages. This would probably take me a couple of weeks, maybe a month to do manually. So this is a lot of work, but this is very great to have because when you're doing deep dives, you might be looking at a company for a long time and researching it and going through the checklist. But when it comes to buying it, the buying opportunity might be in 2 years, or in the case of Lululemon, I did the first initial deep dive in 2019, and I wasn't able to buy the stock until the summer of 2024. And by the time I had forgotten about a lot of the things that I was reading about. I had kept up with the company a little bit, but not to this extent. So what I'm going to be doing is I'm going to be feeding the AI with the latest info once the earnings report come out and updating this report. And this is very thorough, and I'm not going to go over all of this in detail, but I'm just going to show you a couple of highlights. And just to give you an idea of how powerful the AI has become, especially Grok, I think he is much better than, for example, OpenAI. So the first thing I want to show you is the M&A history which for those of you who have followed Evolution for some time, you do know that they have quite a lot of M&A history. And what I had the AI go over is the last 10 years of annual reports and just compile a list of all the acquisitions here up until the latest acquisition, which is Galaxy Gaming. And you can see the amount paid here. Did they use cash or stock? Was it a success compared to what the goal was? And the commentary from the management team. And as an example, you can see here that when they bought NetEnt in 2020, they bought it with 90% stock, which is something that I usually don't like. But if you go back and look at what price the stock was trading at, I think it was around 60 times price to free cash flow. So it probably was a very good decision from the management team when they saw that their stock was very overvalued to use it as currency. And this one is also very good when you're trying to evaluate the management integrity. And Grok was looking at where the management team was making a prediction or statement and what the outcome was. So you can see here in 2014 that they predicted strong revenue growth. In 2015, more than 20% year over year, driven by mobile gaming adoption. This was pre-IPO, and they were right. The revenue grew 52% year over year, with mobile at 17% of revenue. And we can scroll down and see the overview here, which this would probably take me a very long time to go over and just to create this summary. And we can see from this that the management team, of course, like in business, you can't always be right. So like here, they were partially right with NetEnt. They were predicting revenue growth to exceed 500 million euros in 2020. That did not happen. It did reach 478 million, however, which is pretty good. But in most cases, they have been right, and you can see that there's good consistency in what the management team of Evolution has been saying versus what they've been doing. And this one is pretty cool as well, where you have the proxy statement, which would usually take me a long time to dig up, especially for foreign companies. But here we can have a quick look at the CEO, Martin Carlson, for example, and his compensation package, where he has a base salary of 650,000 euros, which is 17% of the whole, 850,000 in bonuses, and equity is the majority, which is something that we like to see at 2.3 million euros, which is 61% of his total compensation. And it is the same thing with the key player, the CPO, Todd Householder, which has equity as 56% of his total compensation. And these are numbers that we would just update every year to see the changes and to check if the management team is still in line with shareholders. And part three of this report is called External Insights. And this is basically where I've gathered, or where Grok has gathered, all the write-ups on the company. And this is from Value Investors Club. This is from Twitter, from Substack, and from joinyellowbrick.com. So you can see here, if you scroll down, you can see the summary of the write-ups, and there are quite a few write-ups, and you can go into more detail if you want to. You can also just press the links here to refresh your knowledge on the company, which comes in handy when you're making decisions about buying or selling. And there are a total of 7 write-ups plus one from Value Investors Club. So a lot of information there. Basically, telling you the same thing that I've been doing and that I've told you in my previous videos. But we also have to take a look at some risk factors when it comes to the company, and there are a few. And when trying to find out the risk, it's good to look at the articles about the company, where Grok reviewed 80 plus articles in the last 10 years and came up with a summary here. It's also good to take a look at what's going on FinTwit, where I asked Grok to pull the latest tweets about the company, which most of them are pretty positive, although some are negative. And in part 4 of the report, you can read about the industry growth and the key competing businesses, which is crucial to know if you're investing in the company and you have the market size and the TAM and the growth drivers. So this is very informative if you don't know much about the iGaming industry. And you can see a detailed breakdown here of the key competing businesses, Playtech, Pragmatic, and some others in the RNG space. So here we have the short interest and the short thesis, where Grok has done some searches online to try to dig up any short reports and kind of summarize them here and give me some links so I can take a look at it for myself. But this one is also a pretty cool feature where I've had Grok summarize our short thesis or my short thesis. So it's just going over the things that after going through all of these documents for the company and compiling all of this information, you have the key risks, which is the UK regulation problems. If they spread, that's a risk for the company. The problems with the US studio build out and the ongoing Georgia studio issues, which I do think Evolution has stabilized, but we'll see. And the slowdown in the Asia revenue and the cyber attacks there, and also competition and slowdown in the RNG business. So as we can see, there are quite a few risks with Evolution, but you do always have certain risks when you're buying individual companies. So that is just something that you have to evaluate for yourself. If the price and the fundamentals of the company outweigh the risks that you're taking by buying the stock. And we also have the Glassdoor metrics, which I think is pretty helpful to have to gauge the culture of the company. You can see that they have 4.4 out of 5 stars. It's a meaningful amount of reviews at 1,200. The CEO approval rating is 93%, and the employee recommendation rate is 88%, which is pretty good. So I don't want to make this video any longer. Just to summarize, I do think Evolution is a high quality company trading at well below their intrinsic value. But like I said before, I'm not recommending the stock. But if you're interested, I would recommend at least taking a deeper dive into the company if you're not familiar with it. I want to thank you for watching and want to ask you to smash the like button and subscribe to the channel if you haven't already.